If you take a look at what we've seen with the IPO, and obviously there's quite a lot of investor enthusiasm and interest in it, we'll have to wait and see how well it trades in the first sort of few days and weeks. But does that give you kind of any more incentive to be doubling down on AI and chip stocks, given the valuations being so stretched and how much of a run-up we've seen in that space already?
Well, I think there's a lot of excitement around AI, and we've seen this actually really since the introduction of ChatGPT last year. Now, some of it is being driven by the reality that when economies are slowing down, we tend to see investors go to where the growth is, when there's not a lot of growth. And so it makes sense that AI and anything AI related has been very, very popular. That could very well continue. What we know is that valuations tend not to be predictive in the near term. Certainly over the long term, we see adjustments and we tend to see a reversion to the mean when it comes to valuations, but it's not very predictive in the shorter term. So I think we could see continued popularity of AI and AI-related names going forward. Again, because I think we're going to continue to see a slowing of economic growth, which is likely to, in the near term, drive investors to areas of secular growth.
Would it also drive investors to, areas outside of developed markets, right? I know that you're quite interested in potentially seeing the rally continue in India, the rally continue in Japan. These are kind of investor darlings, right? But do you expect those flows that have been perhaps diverted out of China to continue going into these markets?
Well, I'd like to think that we're going to just see an increased allocation to Asia because there's a lot of opportunity there. And especially as we see definitively that the Fed has ended its rate hike cycle, that's when I think we're likely to see the U.S. dollar start to weaken, which would be one additional tailwind for Asia equities, especially Asia EM. I think there are some compelling growth stories there, and so I would anticipate that investors increase overall exposure to the area.
So you're not necessarily talking about shifting from China towards other markets like Heidi mentioned, India or Japan. I know that you also like Japan in itself because of the outlook there, but we had comments from BOJ Governor Ueda earlier this week that perhaps hinted at the end of negative rates. Does that alter your calculations at all?
It doesn't, because I don't think we're close to the end of negative rates, certainly not any kind of significant tightening. I think the Bank of Japan is going to be comfortable and willing to tolerate higher inflation. And I don't see any kind of significant tightening anytime soon. That's one more tailwind for Japanese equities.